Good morning, good afternoon, or good evening, depending on where you're listening. This is Dan Turchin, host of AI and the Future of Work, CEO of Insight Finder, the system of intelligence for IT operations, and executive chairman of PeopleRain, the AI platform for IT and HR service. Now, we've heard from a group of amazing investors recently, like Ashu from Foundation Capital, Glenn Solomon from GGV, Evanglos from Synapse Partners, Elaine from Signalfire, about identifying gaps in the market and specifically how software companies go from, call it, first check to IPO. Well, today we've got a special treat. We're going to focus on the future of work, but from the perspective of what's required for startups to disrupt legacy players, and I guess more specifically, the role of product management and product strategy. Rak Garg is an investor at OpenView Venture Partners, the legendary fund behind companies like Datadog, ExactTarget, Instructure, Workfront, and many others. Rak was previously in product management at amazing companies like Atlassian and Redfin before switching to venture. Rak's active on Twitter. Look him up at Rak_Garg, Garg. And he's an enterprise software nerd, which frankly is about the highest compliment that I can pay. Without further ado, Rak, great to have you here. Welcome to the podcast. Why don't you start by telling us how you got into this space?
Yeah, thanks for having me, Dan. This is super exciting. I've been a long-time listener, and it's awesome that I get to be here. How I got into VC is a bit of a funny story. So this was never really the plan. I was a PM at Atlassian for a few years, from 2018 to basically a few months ago. I was working on a new product called Atlassian Access, which was our sort of security and identity product. And we tapped into this really big pain point, which was Atlassian products grow from the bottom up. They're always product led. And so we met all these big companies who had a ton of different deployments of our software, and they needed help doing governance on both the users that use that software and the data that lived inside of it. So I dealt with a lot of those sorts of problems where, we had to, for the first time, sell a top-down product as opposed to a product-led product. We had to inject new DNA into the company that we didn't really have before, because all of our products before were always self-serve. And I realized as I was going through and scaling Access to where it is today that a lot of my founder friends who are running B2B companies always came to that point in the life cycle of their companies where they would start with startups, or they would start with a bottom-up motion and eventually realize they had to go top down to start winning the really, really big enterprise clients. So I started helping my founder friends do that. One of my closest friends got into Y Combinator as a founder, met a lot of his founder friends through that experience, and realized that I really, really enjoyed that. Working with founders on earlier stage problems that didn't necessarily have easy answers like a big company might was super exciting. And so that's kind of what got me thinking about venture. I made a short list of firms that specialized in what I liked doing, which was go to market and enterprise SaaS. And really luckily, OpenView had a role that fit me around that same time. So that's kind of how it all happened.
Now, you may not know this, but you probably forget more in an afternoon than a lot of product people have learned in their career. For the uninitiated, why don't you tell us what a product manager does?
Yeah, product management is a really fun role. So they're responsible for understanding customer problems and then prioritizing and planning around them inside of a typical software company. And once you've planned around those problems, you have to rally everybody around you that's going to be involved in making that problem actually get solved. And so a lot of people say PMs are at the intersection of business, design, and technology. I think that's an okay analogy, but a better one might be that PMs are kind of the glue that stitch together all of the different orgs like marketing and biz ops and customer success and sales and engineering to really deliver solutions to the problems that customers have. So it's a very generalist role. It's one that touches a lot of different parts of the company, one that's in front of customers all the time. And that's sort of the job.
As a product guy, I've often used the term that is self-serving. The product manager is the CEO of the product. What do you think about that? You buy that?
That hasn't been true in my experience. I think the customer is the CEO of the product, and we can sort of talk about why that works at self-serve companies like Atlassian, but it's really not up to the PM to be making all of the sort of CEO executive decisions. The PM's job is more to clear all the roadblocks from in front of the train and make sure that the company keeps solving the things that matter most.
What surprised you most so far about making the transition from operator to investor?
There's been two big surprises. So the first is that feedback cycles are completely different in the investing world than they were in the product world. When you're a PM, you can run experiments. You can ask a question on Monday and have an answer on Wednesday. You can do honeypots. You can run surveys. You can gauge your own performance and your product's performance super, super quickly. And you're expected to do that so that you can make your product as good as it can be in a short amount of time. As a VC, I have no idea if my intuition or if my firm's bets are going to pay off for the next sort of 7 to 9 years. And we do a lot of upfront research and get to know people really, really well to build confidence in that. But the feedback cycle is much longer. And the second surprise is this trade-off between breadth and depth. So as an operator, you learn everything there is to know about your problem. You know your customer really, really well. You know your company's strategy really, really well. You have a lot of depth, but you don't have a ton of breadth. And as an investor, it's much more the opposite, where you learn a little bit about a lot of different things, and you have to synthesize all of that to come up with a coherent sort of viewpoint on where that market's going. So those are sort of the two biggest differences in my mind.
Getting into ventures, a topic that, at least in Silicon Valley, you get two people together and you have at least three opinions about what the right path is. And certainly, if you're on Twitter, there's every flavor of meme related to those looking in from the outside trying to get into venture. What's your advice for, let's say, people who are junior in their career but aspire to be an investor?
No, you're totally right. There's a lot of conflicting sort of claims and paths out there. I think the first thing I would say is to make sure that's what you really want. I see a lot of people who want to get into VC, and this was the same as a PM. There's a lot of people who think they want to do a career and don't necessarily realize what that career actually entails. I think the job of an investor is a lot more fun and a lot more fulfilling when you really care deeply about meeting new people and being super curious and helping those companies succeed. And if it's not about one of those things, then it may not be the right path. So I think number one is make sure that's what you really want. I think once you've decided that, and I'm not really an expert on VC recruiting, but I think getting in is a function of three things. So the first is, you want to be as helpful as possible. You want to meet as many people as you can because you never know when someone you met could be the perfect first hire for another startup. You don't know if someone you met could leave Facebook and go be an amazing founder, and all they needed was a little bit of support. And so being really helpful to people, understanding what they want from their careers, and then doing stuff in your power to help them get there, I think is one key part of the equation. I think the second is to have a perspective on things. So for me, coming from Atlassian, I have sort of a strong perspective on the whole, bottom up versus top down sales motion. I have a perspective on productivity and digital transformations from the perspective of future of work. I think having an opinion on one space or a couple of spaces really helps in selling yourself as an investor and having a perspective on where things are going. And then I think the third thing is to have a skill that actually helps founders in some way. So I have a lot of friends who are investors. Some are excellent financial diligence people who, if you give them a spreadsheet, they can understand everything there is to know about the business super quickly. Some are serial networkers and they just have this massive network and always the right person for you to meet. And others, especially from the operating background, have just seen a lot of problems and can help you solve those problems. So I think those four sort of things are what I would advise people to do.
You wrote this great blog post recently about Splunk bundling, and you were specifically talking about how Splunk may be vulnerable to a whole crop of new technologies, new startups that have identified ways to kind of, dismantle or crack the armor that is the juggernaut that is Splunk. Share with us the thesis behind that post.
Yeah, well, to start with sort of background, Splunk is a company that's been around since 2002. And they've been growing really, really rapidly for the last 18 years. And the main use case for something like Splunk is, you work at this company, you've got a ton of different data sources, things like APIs and employee activity and stuff on your network and user activity for your products. All that data is valuable. You want to do stuff with it, but it's really tough to actually do anything with it when it's unstructured, doesn't really follow the same schema, doesn't live in the same place. And so the reason Splunk was really disruptive when it first came around was that it's an answer to all of those problems. It'll ingest all of these different data streams and help you make sense of them as an analyst. My thesis was for unbundling Splunk specifically for the security use case. So Splunk is often used as a SIEM, a security information and event management platform. And the main sort of user for that sits inside of a SOC, a security operations center. There's someone who's looking at these streams day in, day out. They've set up alerts. They're trying to make sure nothing fishy is going on. Like people trying to hack your product, people doing shady things inside of your company, like giving your prospects to a competitor. And these are really, really important things that you have to monitor for constantly if you're sort of a mature company. Splunk is really good at that. It's really good at what it does. It's got a ton of horsepower, but the problem is that it's really expensive, it's really slow, and it creates a lot of false positives just because of the volume of data that's coming in. And so my thesis is that we live in this world where now we have access to better filtration techniques that are being popularized by companies like Cribble and a few others. And you don't necessarily have to send everything to Splunk anymore, which means you can save a lot of money on your Splunk bill. And what I mean by that is, you don't have to save every bit of metadata for every event that was logged by every API in your company. You can just pick and choose the things that matter the most. Aside from cost management, the cost of data storage and data querying has also come down tremendously in recent years. I think Snowflake is a really good example of this, where it's no longer prohibitively expensive to store a ton of unstructured data in one place and also query it. Before, you had this trade-off of hot versus cold storage on Amazon Web Services. And before that, it was all on local disk, which was super expensive. So we're seeing that cost consistently come down. I think we're also seeing more advances on sort of the automation side of things. So false positives are a big problem with Splunk, where you've got trillions of events leading to thousands of alerts a week. You can't possibly spend time on all of them. So how do you make sure that the alerts you're setting up are really reflective of the risk that your organization has? And companies like Tynes and others in sort of the security orchestration space, I think, are helping SOCs and analysts and detection engineers do a much better job of that. So my thesis is not that Splunk goes away or that Splunk dies. It's more that for the specific use case of security information management, I think a lot of new startups and new tools will come around that make the life of the average detection engineer way simpler.
I was in the SIM space for a while with a company called CellOps. It got acquired by a company called Fortinet. And it was very easy for next-gen SIM companies to look at a Splunk or an ArcSight or a QRadar, one of those companies, and say, they've sucked all the oxygen out of the room. There's nothing left to do, right? They're mature, why compete with them? And then the startups that end up being the disruptors look at them and say, yeah, but they're coming apart at the seams. It's decades old technology, right? What's your advice for entrepreneurs who look at kind of a dominant player like a Splunk, but maybe it's an SAP or a Salesforce or a ServiceNow, and say, it's too daunting. They've done everything there is to do.
Yeah, I'd say three things. So first of all, going back to when Splunk started, there was already QRadar and ArcSight and a few others that were in the market that were arguably more popular, better capitalized, and had way more mindshare. And they had to go through this same sort of problem of convincing companies that they were a safe place to harbor their data. And the way that Splunk solved that problem was, instead of worrying about redefining SIM or disrupting any of those companies, they decided they were just going to focus on the core problem. And for them, that core problem was, there was this company called Google that was starting at the same time that made searching the web super, super easy. Nothing like that existed for log events. And so they were like, that's what we're going to do. We're just going to build Google for log events. And they did that really, really well in the early 2000s. And that's kind of the reason why, ArcSight and QRadar are still around, but Splunk has largely sort of dominated and won this space. And that's why they focused on product, they focused on the core use case and built everything else around that. And so it's a bit of a roundabout way of saying, if you're a startup that's looking to redefine a category, I wouldn't put the pressure of redefining a category on yourself. Instead, I'd focus on one thing that any of the big players don't necessarily do well, that matters a ton to users, and just focus on that. I think the second thing I'll say is that a lot of big companies, and this is kind of a generalization, a lot of big companies tend to win off of distribution and integrations and not off of product. And so when you're a small startup, you're probably not going to win on distribution, but you're very, very likely to win just off of user love and off of making the life easier for whoever you're targeting. And I think whenever we see companies kind of take down big incumbents, that's sort of the way that they do it. Like there used to be the saying that, you never got fired for buying Blue, which was buying IBM back in the 80s and 90s. If you're a startup, people can get fired for buying you. That's a thing. But no one's going to get fired because they tried out your product and you made their job a lot easier. And that way you kind of save yourself a lot of the sorts of hurdles of dealing with enterprise sales and top-down deployments and POCs and all that kind of stuff. And then the third point is just that, bottom-up self-serve software doesn't work for every vertical. It doesn't work for every software company. If you find yourself doing top-down sales or, trying to do POCs and deployments, I think I would ask yourself what your sort of edge is. Is it better integrations? Is it the fact that you can integrate with way more products than anyone else can? Because going back to this sort of thesis, Splunk bought a company called Phantom a few years ago, and Phantom works very well with Splunk, but it probably doesn't work as well with other things as their competitor Tynes does, right? And so there are different ways to sort of compete outside of the typical "we're going to take this company down head on" sort of methodology. But that would be my.
Splunk famously went to market through what I'll call the frog in the pot of boiling water approach, where you get an engineer installing Splunk on a server under their desk, and then another few months go by, and the CFO is writing 6-figure checks a month to Splunk as the data it was ingesting grew. About the other, I think, best example of an enterprise software company growing virally, and in fact, without an enterprise sales team, is your alma mater, Atlassian. What have you learned about, let's say, just even the culture or the approach, the strategy at Atlassian that made it successful growing virally as it has?
This is a family-friendly show, so I won't curse. But if you walk into any of the Atlassian offices worldwide, you're going to see one slogan that's sort of plastered in blue on every wall of every floor, and that's "Don't F the customer." And that's not a product decision. I don't think any PM is out there saying we're going to.
I took a selfie of me in the Sydney office, that old castle building. me a selfie with that in the mirror. It's a great example. Don't F the customer. Yep.
And so it's entirely a cultural thing. That was sort of Atlassian's paramount value. It was no matter what happens, you always do right by the customer. And it's certainly not a unique sort of value. Amazon is well known for evangelizing that as well. But culturally, we would use that to resolve disagreements inside of the company. If there was a trade-off between revenue today and revenue tomorrow, the tiebreaker would be what's better for the average person using Jira or using Confluence. And so I think it's less about the way that PMs operate or the way that the products are built, and more about this DNA of always starting from the customer problem, everything you do is revolving around the customer, and always keeping that sort of front of mind for yourself and for your team. And then there's product stuff you can do to kind of amplify that. With Jira, for example, Jira was good enough when it first launched where people picked that over everything else. And then it had virality and network effects because you want your teammates on Jira, right? You get your work done better when your teammates are on Jira. And then when teammates were on Jira, they realized they have dependencies and they want their dependencies to move faster and be more visible. And so they expanded that way throughout a company. So I think having a natural expansion path was also very, very unique to Atlassian and to a lot of companies that are sort of operating in a similar way. And I think lastly, it's around integrations and making sure that your products play really well together. So typically, if you're talking to a really big enterprise company, they're going to have a list of accounts. They're going to call you, your account executive or account manager. They're going to say, hey, we think you'd be a great candidate to try out product Z, which we just launched last week. We think you'll love it. With Atlassian, that doesn't happen. What happens instead is you're looking for a core problem like documenting your software projects. You look for what works best with Jira, and it turns out that that's Confluence. And you're just going to try Confluence the same way you tried Jira and expand the exact same way. So I think it starts with culture, it starts with people, it starts with priorities, and then there's things you do in the product to build around that.
So now take the counter argument. So some would say Atlassian's getting a little long in the tooth, and they've got a $65 billion market cap, and maybe they're getting a little big and complacent. Who's the heir apparent to Atlassian? What's gonna take to disrupt them?
I'm going to make a lot of people mad. So I think Atlassian is really interesting because it's this story of starting mid-market and moving to the enterprise. In a lot of ways, Atlassian is its own disruption story, where it's still trying to be the conduit for digital transformations and agile development for the Fortune 500 or the Fortune 100 that still operate in obscenely waterfall ways. And so I don't think it's a matter of who is going to take down Atlassian. I think it's that Atlassian kind of moves upward and disrupts other legacy players. And in doing so, I can foresee other products solving that SMB mid-market use case much better. And we're already kind of seeing signs of that. Like Asana IPO'd and is doing tremendously well. And the reason for that is because Asana is well loved by non-technical users, right? If you think about it, there's no reason that Jira couldn't have been Asana for the HR team or for the marketing team. But positioning, GTM, a lot of other sorts of mental models with the way Jira works made it so that a new entrant like Asana could become big enough to do a direct listing and to actually go public. And so I think like examples like that are super prescient for Atlassian. I think best of breed tools are another way that that kind of goes down. Linear is well loved by many of my founder friends who kind of scoff at me when I say they should use Jira instead. I think Notion has kind of proven that people really want wikis and document management, but they want it in a way that is pleasing and easy and integratable and works really well with everyone and not just Jira. And so I think, it's less of a question of who takes down Atlassian, how does Atlassian lose? It's more a question of, does Atlassian retain its ability to serve the smaller customers while still targeting the Fortune 100s? And it could be that it's spreading itself a little thin there. I don't know. I haven't been with the company for a few months, but I would see that as the opportunity.
In Silicon Valley, we are obsessed with navel gazing. We dissect and put back together all the elements of our culture and try to understand the secrets to our own success. What is one thing that you'd most like to change about the culture of Silicon Valley?
I think the first thing is that the Valley has always been about a direct to consumer, always talk to the customer kind of approach when it comes to enterprise software. MSPs are not really a thing in the Valley. Hip companies don't use IT channel partners. Hip companies find the tools they like Figma, and they install them, or sorry, not install, they sign up for them, and they get their teams using them. And that is the way that products are built, products are sold, products are used. I think much of the world doesn't actually operate that way, especially outside of America. And I think one of the things I'd like to see the Valley as sort of an ethos change is just be more in touch with the way that other people buy and use software. A lot of people still use MSPs. A lot of people don't have IT teams to do SSO via Okta to administer users in Figma. A lot of people use things like Cortelligent and KPMG and other sort of service providers that handle a lot of that stuff for them. And a lot of those service providers are building or are serving customers with the worst tooling. They don't have access to good quoting systems. They don't have access to good user management systems. They make feature requests to PMs like I used to be at Valley companies, and a lot of Valley PMs say, no one uses you guys. Why would I build software for you? I'm going to build software for my customers. And I think that's one of the things that like is actually a really big market for disruption. The second thing is a bit more about the Valley as a place, like a geographic place. I grew up here in Sunnyvale in the 90s. I went to public schools my entire life. There's a world outside of Soma and South Park and Hacker Way and the Googleplex that I think a lot of people who are in the valley or new to a valley don't necessarily interact with. And I'm not prescribing an action, but I think just taking a more active role in the community, going to the library, going to town hall meetings, going to the farmers market, like just doing things that are outside of your job and your office are a big deal. And I would want to see more people doing that.
Hey, Rak, this has been great. We're about out of time, but I got to get in one last question. I know you're a little bit opinionated, and I want to hear your perspective on this one. Let's say you're looking back on your career in the rearview mirror. What is the single accomplishment that defines your career?
I think the most, I guess, impactful accomplishment that I'll look back on in 30, 40 years is people. I've always kind of made it a point to try to develop people, especially when I was, back at Atlassian. I used to run the associate product manager program over there, and so, I ran hiring from all the schools that we would visit, and mentored a bunch of kids who were sort of in their first PM role or first PM internships, and watching them get promoted and launch amazing things and hopefully become founders one day and hopefully let me invest in them someday. That's sort of the most impactful thing. Just meeting people and in some way changing their trajectory. And as a VC now, it's like I can do that with founders. I can do that with people who are looking for their next play. I can do that by, helping a friend land a job at a life-changing company. And I can also do it by helping breed sort of the next generation of investors that come after me and my peers who are in the job today. So that I think that's sort of the biggest accomplishment outside of anything else.
A lot of the companies we've talked about today are the ones that are going to go and define the future of work. I think that's pretty well understood. My ask is when we have you back next, could you tell us about maybe some of the most exciting ones that you're seeing and where you're investing?
Yeah, definitely. I can definitely do that.
We're definitely just getting started, but we're gonna call this a wrap for today. Everyone, please go out and follow Rak _Garg GARG on Twitter, and join us again next week for another fascinating discussion with a fascinating guest. This is Dan Turchin, your host of AI and the Future of Work, signing off.